Welcome back, everyone, to the Schaefer Stock Market Podcast. I am Josh Selway, an editor at Schaefer's Investment Research. Today, we're going to talk about a number of different stocks. The market generally is pretty quiet, not a lot of big news. One of the main focus is the testimony of the big bank CEOs on Capitol Hill. They're talking in front of Congress. There's like 6 CEOs or so. I tuned in for a little bit, but those hearings give me anxiety. Everyone's always trying to say things in like 2 minutes or less, and people are beating gavels, and I just can't watch them too much. I tuned in for a few minutes, and it's just not really my thing. So there's not much else going on right now. I did see a stat on social media that I can't really remember who tweeted it out, but it was the last few days, 6 days or so, 7 days or so, have been some of the lowest volume days of the year. Been sort of a wait and see approach here as the quarter changes, and now we're waiting for first quarter earnings season, which will come out at the end of this week. Obviously, the big banks will be in focus there once again when earnings season kicks off, as the biggest banks are some of the first to report earnings in the week ahead. So the first stock I wanted to talk about today is Xilinx, ticker XLNX. This is a semiconductor stock that has been rising on the charts in the past year. In fact, it's almost doubled in value. And Xilinx I remember it as the 5G chip maker. They are really big into 5G technology. And just today, in fact, Cohen came in and said that 5G infrastructure, the spending behind that, could continue to provide tailwinds for Xilinx going forward. This was part of a bigger note out of Cohen, who was looking at the broader semiconductor sector and was saying that at the end of 2018, it expects the semiconductor sector to gain steam once again after a slow first half of 2019. Sorry, I got distracted there for a moment. An ant started walking on my microphone, and I kind of lost my train of thought. Xilinx almost has doubled in value over the past year, and it's currently trading right near record highs. And in fact, one of our analysts, Chris Preibel, just pointed out that Xilinx has seen the largest increase in its market cap for companies valued at $40 billion or less, and that's since September. Its market cap has gained almost $13 billion since that time, and we have the entire chart up for the top 5 increases in market caps for that size of companies over on a chart on Instagram, if you want to follow us there, over at @Schaefers_research. But I should also point out that Wall Street isn't that bullish on Xilinx. Actually, the majority of analysts in coverage still have less than a buy rating, a hold or sell. So there's a chance for upgrades there to still drive the stock even higher. And going off that, another one of our analysts ran a filter on the stocks with the best charts that have the best chance of seeing analyst upgrades. That was courtesy of Rocky White. Thank you, Rocky. And Xilinx landed on that list as well. And there's only about 10 or so stocks on that list. Another name that I should mention that made that list as well, that is a stock that continues to go higher, is Chipotle. Chipotle, even today I saw it got another analyst note, which I think is its 6th price target or bull note from the analyst community in about like the last month. So Chipotle, Wall Street is falling in love with Chipotle. We could see the same happen here for Xilinx. A couple stocks I wanted to talk about together, we can call them the rough patch stocks, are First Solar, ticker FSLR, and Under Armour, UAA. These were 2 stocks that in recent years have suffered pretty substantial pullbacks. Under Armour's is more the past 2 years, even a bit longer. First Solar was basically 2018. It got crushed after that. But now analysts are moving in, and we've seen a number of bull notes for each of these stocks as Wall Street begins to think that a bottom is in place for First Solar and Under Armour. For Under Armour, it was a bull note out of Citigroup, which upgraded the stock to buy, set a $29 price target. So right now, Under Armour, ticker UAA is what I'm looking at. There's also ticker UA, but for UAA, the stock is trading right around $21, so that's pretty substantial upside there that Citigroup is pricing in for Under Armour stock. And essentially Citigroup is saying that changes to put its focus on profit growth going forward, and that it's adapted to a changing landscape in the athletic apparel industry. Under Armour stock's been hovering around $20 for a while now, And this for a long time was one of the most heavily shorted S&P 500 stocks, and sentiment is still very bearish on Under Armour. It's kind of in this no man's land. If it can start to get some legs and move higher, there is a lot of sentiment, negative sentiment, that could unwind and help drive it higher in the form of short interest, and the way that analysts are positioned right now is still mostly negative. And there was also, Rocky White pointed out some bullish technical data on Under Armour as well that would suggest that even just in the short term, upside could be coming for that stock. Also, I was trying to do research on global participation in sports and whether how much that's been growing, because this note for Under Armour from Citigroup called that out and said that participation in sports is growing around the globe, and that should be a boon for Under Armour and Nike as well, obviously. Citigroup was also bullish on Nike, so I can point that out as well. But I thought that was interesting. It was hard to find any good data on that. I only looked for a few minutes, so that could be a trend to watch as well. That's not something I've heard talked about, is how much participation in organized athletics is taking place and growing around the globe. At least in the US, it is apparent in the numbers that participation in sports has continued to grow, at least in the high school level. That's what the numbers show. And in fact, the data says that for 29 consecutive years, participation in high school sports has been increasing in the US. So at least domestically speaking, more and more people are playing sports, which should be good for the athletic apparel companies. As for First Solar, this was again Goldman Sachs weighing in. This is the third time I can remember in like the past year Goldman Sachs discussing First Solar, and it's just been this gradual bullish case behind First Solar. And today Goldman Sachs added First Solar stock to its America's Conviction list and lifted its price target to $75 per share. The stock right now is hovering just below the $60 level, so a large upside there expected for First Solar stock. First Solar stock has been on a steady climb higher this year, and last year it traded around $80 per share. Again, around $60 today, and it's pacing for its best close since last summer. So First Solar is trying to take back the territory it hasn't seen in over a year. Goldman Sachs also weighed in on Terraform, ticker TERP, and it downgraded that stock to a sell. And that Terraform owns a lot of wind energy assets, and Goldman Sachs sees a lot of issues with that going forward, and that is the reason for the downgrade to sell. Another company we were just looking at Schaefer's was Faro, ticker FARO. That's Faro Technologies, and they are focused on a number of interesting technologies. Specifically, they have some high-end 3D laser scanners, and what these things can do is take an image of like a building and give you these really accurate pictures and dimensions and measurements, all just from this 3D scan in that technology. Faro stock had mostly been struggling over the past year, but just this week it spiked higher because the company named a new CEO, and it was last seen trading around $55 per share. Its market cap is just under $1 billion. And another stock to be hitting fresh highs this week is Snapchat parent Snap. It is trending higher in 2019, and it's been getting a lot of bullish analyst notes. Just this week, you saw RBC upgrade Snap to outperform, and it set a $17 price target, and Snap right now is only trading around $11 per share. That stock fell to all the way down to around $5 during the last 52 weeks. That's where its low is. So $17 would be obviously more than a 200% gain from those lows. And Snapchat has been trying to expand its services. It's looking to get into gaming. It's going to start with one of its own games here soon and see how that plays out, because it's noticing this trend of social interaction, social media inside of certain gaming. Specifically, it was looking at Fortnite in free games such as that. So now Snapchat is moving into the gaming space, as Facebook has tried to do as well. And speaking of social media, Twitter stock just landed on a table based on the data that Rocky White just ran in his indicator of the week. If you don't recall, the indicator of the week comes out every Wednesday morning, always filled with great data. And this week it was looking at how stocks perform after certain win streaks. And Rocky identified Twitter and WellCare Health Plans, ticker WCG as two stocks that could be due for some mean reversion or a short-term pullback. And we're seeing that today with Twitter. And Twitter is actually not only facing this 9-day win streak, but also the $35, $36 area, which has capped its last two breakout attempts. So Twitter looking to overcome some historical resistance there. But for this week, folks, I'm going to leave it right there. There's going to be a lot more to get through next week once we get into first quarter earnings season. But I want to call everyone's attention to our free newsletters over at schaefersresearch.com. You should start off every trading week with Todd Salamone's Monday Morning Outlook, looking at some of the most important dynamics in the market, the sentiment set up in the market, everything that you need to know for short-term and long-term trading. So check that out as well. We also have 3 newsletters that go out throughout the day, morning, afternoon, and night. Those are free if you want to stay up to date on the market and get some inside look at intraday options activity, top 5 things we're looking at every day, all kinds of stuff in those newsletters. If not, just check us out on social media, StockTwits, Twitter, and Facebook, and we're upping our Instagram game as well. So until next week, this is Josh Selway signing out. Thank you so much for listening.